Okay, so we are here with another Canadian context market report. So we're basically unpacking CREA data, Canadian real estate data, using your platform, the Habistat, which is basically just visualizing all of the information that the Canadian Real Estate Association aggregates from boards across the country to try and draw some conclusions and see what's going on here in the Canadian market. So if you want to maybe just give me a quick introduction of yourself and the platform, and we can go from there.
Yeah, so I'm Jeff. I've been running the Habistat with my partner Devin for the past year and a half. We're based out of Ottawa, but really we're looking at a national lens here, and really just trying to make any real estate data available to general public, because we know that can be hard to find. So what we've done on our platform, I'll share my screen here, is every month when CREA posts the latest housing stats, we're basically setting it up so you can answer these 7 questions about what is happening in the housing market. So what are the long-term price trends? How quickly are prices changing? Where are homes most expensive or least expensive? Which cities are changing the most? How do cities compare, and how do different home types compare? So we'll walk through a couple of key things we're seeing. The latest data available is for March 2022. So we'll kind of take a look at some of the trends we're seeing there. So I know, especially social media, there's been a lot of talk about slowdown, right? But what we're seeing so far on a national level is home prices did go up from February 2022 to March 22. So in February, we're looking at 868,000, March 887. So if we click on the next page, we can see how quickly prices are changing. And this basically tells us, the acceleration rate. So how quickly are prices rising or falling? And we can see February 22 was actually a record month where prices rose over 5%. It still rose 2.2% in March, right? So slowed down a bit, but prices are still going up.
Right. Yeah. So you're sort of just seeing a reduction in the rate of change.
Yeah, exactly.
Okay.
And one thing I thought was interesting is I flipped through these, and if we go to apartments, this is actually the category where is still pretty strong. So the second highest ever month over month change. If we looked at like single family homes, it's definitely fallen off more. And I want to get your thoughts on that. Is that just because of that price gap between apartments to single family homes, that this is just what people are starting to pile into, what's still affordable to some people?
Yeah, I think that, the impact of what's happening with condo and apartment product right now is twofold. Number one is in the micro, people are anticipating the reopening of the workplace, right? A lot of people are moving back into urban areas, and in those areas, typically the type of product that you're getting is an apartment product, right? Especially if you're buying a more affordable product. But also density was under question for the past 2.5 years, right? Like, we were wondering whether or not the apartment style living would actually survive COVID. Not that maybe it was that extreme, but a lot of people wanted backyards. They didn't want to be in a dense city. They didn't want to be in a densely populated buildings. It was annoying to wear your masks in the common area of the, there was a lot of different things where a part of your home was regulated by, the rules. And so I think that as the cities start to reopen, we start to see a greater degree of bullishness towards that type of product, but also, people are comfortable with that lifestyle again. They're imagining that they are going to be able to have a social life. They don't need a backyard, et cetera, right? So that's number one, right? Number two would be, yes, like, as a result of COVID and all of the phenomena that I just described, suburban homes or detached homes, anything with more space than an apartment, was commanding a premium for the past 2.5 years, right? And so, apartment style product has resumed its role as the price floor product or the entry level product on the housing ladder for the past 2.5 years. Whereas, prior to COVID, I would say condos were having the best year that they had ever had. And the city of Toronto looked like, it was completely unshakable. And I would imagine the same thing for other major metros across the country. So policy has been driven towards urbanization, right? We're focusing more on urbanizing bigger buildings, denser buildings, more intensification in the core, and then that kind of just, it could put a pause in that ideology, and moved a lot of the capital investment, et cetera, development all out into the suburbs, brought the price up. And now, the price floor product is an urban denser product, right? So I think it's both, right? Whatever's the most affordable product in the market is always going to be in style. And we're also seeing it benefit from, changes in micro patterns.
Yeah, agreed. And yeah, we've looked at some charts in the past where we're just looking at, the small towns only,
Yeah.
Probably less than 50,000 people. And those are like among the towns that have performed the best over the past 2 years, right?
Right.
And just in some cases, seen prices double. They're probably, I'd say, the most at risk of a more like medium to major correction, right?
Right. Yeah, I would agree with that. I think that I just think that, there's a lack of sustainability with when you see run-ups like that. Like even with, and if you just look at this chart as an example, like every major growth was followed by a big decline in growth, right? Like it's not like you can see sustainably prices growing at these extreme rates, right?
Right.
In a lot of cases, then you start to see negative growth, right? Where you see a little bit of a correction. So
yeah, and adding another month to the consecutive streak here, still, I guess it's been 2 years since prices have fallen.
Yeah.
in a given month, right?
And I mean, even April 20th, April 2020 wasn't an exceptionally good data point because I think that it was like more of a pause in the market. It was very low volume. It's really easy for data to get skewed up or down, right? Like, so you could even say, it was probably 2019 when prices, sort of were falling last.
Yeah, exactly. And it's not just housing, like it's really any asset class. When you see it just constantly going up, eventually, in most cases, you're going to see some kind of correction.
Right, for sure.
I'm going to jump to this tab where we're seeing which locations saw prices change the most.
Yeah.
So here, what we're doing is we're comparing month over month, February to March 2022. And we're looking at every city that Korea reports on. On the y-axis, we're looking at the home price. X-axis, how much it changed month over month.
Yeah.
So if we just quickly count, you can see 1, 2, 3, 4, 5, 6 cities saw prices decline, whereas everything else, saw increases. And it looks like that most popular concentration is, increase of about 2% here.
Yeah. And I think the interesting part from my perspective is you're starting to see, a lot more to the right of your Vancouver and Toronto, right? Like this theme of people chasing affordability is sort of spreading across the country. It's not just the GTA, right? And in a lot of cases, it's like this resonates with the idea that apartment product is beginning to resume on the price floor. It's like if you're gonna end up in Toronto, Vancouver, and another major metro in Canada, you're likely going to end up in that type of product. So you're starting to see people chase detached product or detached maybe city living into smaller urban areas across the country, right? And that's why, and we've heard it. And actually, we're hoping to do the Twitter space on this phenomena this week, which is basically, what are some of these smaller CMAs seeing as a result of price growth, et cetera? Because Nova Scotia announced that they're going to put in a foreign ownership tax for anyone outside of the province. I think so. There's a lot of policy at work here to try and regulate the market if rates don't end up doing it themselves, right?
Yeah, I think that is an interesting one. Do you know if that interprovincial like taxing has been done before?
I think New Brunswick already has it. I believe. New Brunswick, yeah, and it's like, but it's not it's like a land transfer tax, basically.
Right. Yeah,
it's an extra land. I think that's what it is. Yeah.
Got it. But yeah, like looking at this thing, like you mentioned, if it's really this kind of like lower price point, right?
Yeah.
Everything that went up more than 5% was, below like 700,000, most of them below $500,000 here.
Yeah.
Halifax is the interesting one. And maybe if we jump over to just compare some cities over here, just throw on Halifax. So yeah, if we're looking at Halifax, and then we're just seeing a massive climb in the past couple months here. Is unlike anything the city's seen before, but at $493,000 is still, coming from out of province, that could be a very easy transition for someone. So I do think that interprovincial tax is an interesting idea.
Yeah, and I think like the interesting part as the policy discussion starts to evolve is where are we seeing the best price to wage, right? Because it sounds crazy contextually, like when you just contextualize $500,000 and look at this chart, and sort of like before the run up, you're probably in the 300,000s for average house price, right, or even below. It sounds crazy, right? But then you think, okay, well, wages here by comparison to, or wages in Halifax by comparison to Toronto, or there's likely less of a disparity by comparison to some of the other major cities. And if people like, a lot of this is the story of new household formation, right? It's like young people from our generation saying, I'm never going to be able, I want to have a family, I want to have kids, I still want to live in an urban area where I can walk everywhere. And I know that there's a good job market in Halifax. I can, my skills are transferable. Maybe I can even work from home with my career here, or whatever it is. So you're starting to see people change their settlements. And this is like one of the first times, I think, in Canadian history where you've really seen a major resettling of a new generation, right? Maybe since like the 90s, again, when you were seeing similar thing, right? Huge challenges with housing costs. So that's what I find interesting. And anecdotally, I've seen a lot of people do it. Like I've seen several young families or people planning to have families move to Halifax is one good example, but a lot of different countries across Canada to be able to live affordably. Montreal has been a popular one. So yeah.
And if we throw on a couple of New Brunswick cities here, Fredericton and Greater Moncton, like you said, also seen that jump lately. So it seems like there's very few, even these are kind of like smaller cities, right? And they're all experiencing this growth. So it even seems like that at this point, there's not very many options left beyond maybe I think Saskatchewan, maybe if I throw those in here.
Actually, sorry, never. It says Halifax, Dartmouth. I thought I was going to say, is there a separate CMA for Dartmouth? But yeah, I think Regina is the only one that's really trading sideways, right? Like, and I actually, it's interesting, just sort of from my perspective, I actually am really bullish on Saskatchewan, especially given the prices haven't come down, or sorry, haven't gone up so much, because there's a little bit of exposure to oil there, but like you're also seeing and I think a big future of Canada diversifying the economy. You're seeing growth in places like North Bay, Sault Ste. Marie, et cetera, because the job market up there is on fire. Like Kirkland Lake, as an example, right? All of the gold mines, like they're opening mines on a regular basis. But Saskatchewan, from my perspective, is it's an agricultural hub, right? And that's going to be a big piece of the future for Canada as we repatriate supply chains. As I think food crisis, going to become more and more of a common theme over the next several years as we start to see global supply chains erode. So, if we're making a pick just based on this chart and most of the charts that you guys have available on your website, I really like both of the CMAs in Saskatchewan.
Right. And I guess why do you think, those cities like in New Brunswick, Nova Scotia shot up, but Saskatchewan is, prices are even down since, the mid 2010s. I guess what's the distinction there? Is it just
I would say
similarities?
Yeah, I would say probably the same reason that Alberta hasn't done exceptionally well until just recently. There's not a lot of wage growth happening, not a lot of industry growth. Unemployment's not where it is in other areas of the country. Like in Ontario, you can't find people to do jobs, right? Like it's like that's how tight the labor market is, and it's not so much like that in those other areas. So I would say that's probably the primary thing, right? The other thing is like their construction costs haven't got too wild yet, right? Like comparatively, because there's a lot of it, there's like they have very robust industries as a result of agriculture, oil, etc. Like there's a lot of heavy equipment in Alberta already, right? There's a lot of, so you don't have to shuffle things around so much to accommodate to build a home or build a subdivision. Like, and the supply chain can be a lot less cost prohibitive by comparison to an Ontario market. That would be those would be my big guesses as to why it's like that, you know. And it's similar to like Quebec City as an example, hasn't seen nearly as much growth as some other and Quebec City being a good example of as a very millennial friendly city, has grown quite a bit, but not at the same rate as like I don't know, maybe a Halifax would be a good example, right?
Yeah,
And
it is starting to pick up a little bit, but
it is for sure,
you're
yeah,
right.
yeah. But a big part is, you know, Quebec for during COVID, like, and this is maybe where it's more illustrative, right? Is like Quebec's employment base, a lot of it comes from tourism, right? And so in Quebec City, you're not seeing the same industry opportunity that can drive that price up, right? There's not as much domestic growth in the economy where people are making tons of money, you know, whereas in Halifax you might have been seeing that, right? They have a pretty strong financial services sector, you know, pretty strong food fit like fisheries, what the oil sector as well, right, with some of the offshores. So I do think that there's a bit of a pegging to the employment type and industry in the area.
Yep, makes sense. So we chatted about interest rates briefly, and how, you know, that might do the job itself, right? So we have this chart here where we're looking at rates and the national benchmark, or sorry, average home price for the past 40 years. So going back to 1980.
Yeah.
And yeah, like, so in the gray here, we're looking at the conventional mortgage lending rate for StatCan. There is discounting that's typically applied to this rate, but that data is hard to come by, going all the way back. So, you know, back in the mid 80s, interest rates peaked, you know, over 20%. It's had, you know, some bumps along the way, but has been continually declining since. They were starting to raise a bit before a pandemic, but obviously we're brought back down again. And lately we can see they're starting to creep up a little bit. Overall, though, you know, there's some periods where the home price is kind of stagnated, but obviously the trend has just been on and upwards, right?
Yeah, it is interesting though. I mean, like, it's probably difficult to even see the magnitude of a rate hike impact in some of these areas. But, you know, like if you look at, maybe, I guess it would be your 08 kind of thing, right? Where you start to see prices coming down and rates coming down as a response. Like, there's definitely some correlation. You would almost need to tighten the axes, or do, you know, smaller chunks to really get a grasp for what it was, or potentially even inverse the you know, the lending rate. You could kind of do that to like see if there's a direct correlation side by side. But yeah, I mean, it is an interesting thing to look at over time, because it does seem almost like it's not directly impactful, and the reality is it isn't. Prices are very much a function of inflation, right? And so as we're seeing rates go up as a response to inflation, the question is, are rates going to have a bigger impact, or is inflation going to have a bigger impact on house prices, right? I don't know if I know the answer to the question, but I think that you know, rates are certainly making themselves evident already in the price and in the volume side of things.
Right. Yeah, I think there's just so many ways that, you know, interest rates and home prices are intertwined, right? Like, first of all, we just think about purchasing power. Rising rates are obviously going to bring that down. On the other side, is impacting, you know, people who already have mortgages. Some cases, how much they're paying every month, right? And does it bring you to the point where, you know, that monthly payment increases so much for people that they want to put homes back on the market, right? Because we're still at the point where supply is historically low, and in my opinion, unless we see that rise, rates can go up and reduce purchasing power. But if there's not supply in the market, there's still going to be, too few assets for still a shrinking number of people to chase, but still enough. So that's my question, right? Because I know, especially in Toronto, Vancouver, people are already used to having cash flow negative properties.
Right.
So at what point, I guess, do we see a supply flood due to rising rates?
Right. Yeah. I mean, from my perspective, it's interesting, right? Because I think people are okay being cash flow negative to a point, right?
Yeah.
As that cost, if you're starting to bleed out more, it becomes less and less compelling to hold the asset, right? Especially if, in most cases, people are okay to bleed out on an asset if it's going up in value. If you can no longer see that it's going up in value, and the cost of bleeding out on it is increasing because of inflation or because of interest rates or whatever it is, right? Because interest rates aren't the only piece that's moving here, right? Condo fees are going up, gas is going up, right? Electricity is going up, taxes are going up. So like there's a lot of different moving parts that go into the cost structure of a house, of holding a money losing asset as well. So from my perspective, I would say I think you're already starting to see some of the signs of financial distress. The challenge is people only have to pay their mortgage once, maybe not a challenge, the good thing. People only have to pay their mortgage once a month, right? So it takes a while for that financial stress to accumulate. And people only need to renew their mortgages typically every 5 years, right? And so they have time to buy some breathing room in some way, shape, or form, to I guess get creative, sell the property before they have to renew, hope they can just check the renewal box at a higher capital cost, whatever it is, right? So to me, there's a lot of moving parts that could create it. I just think that, I think we're entering into a longer bear market. I think that consumer sentiment is what's going to drive prices down. I don't think it's going to be real quantifiable things, right? I don't think it's going to be a massive reduction in buying power. Like that'll have part to do with it, but I think people are going to say, oh, Canadian house prices can't go up forever, and now they're going down, and that's okay. And people will trade in and out, and some investors will continue to hold. I mean, the only other piece that I would say investors have going for them is that rates are positively correlated with rents, right? And maybe it would be worth kind of looking at the sort of the rental rate. So if rates go up, rents can climb as well, because the cost, again, that reduction in buying power, the cost of ownership goes up, people are more inclined to rent, right? So some investors might fare okay if they're in the buy and hold, but the people who are buying for speculative purposes or to flip or whatever it is, I mean, I don't think that was a compelling strategy to begin with, and they're about to find that out.
I agree. Yeah, that short-term trade, I mean, at this point, it's just extremely risky, right? There's just so much uncertainty. We've seen record growth within such a short period of time. I wouldn't be surprised, if house prices went either way, like 20% in the next couple of years, right?
Right.
To be honest, but I guess the thing is, when you look at the long-term trend, right, and that's kind of why I went back to 1980. If you can kind of stick it out through, say, rising interest rates, and during, I guess, periods of high inflation, you're going to want to hold hard assets such as housing, right?
Yeah.
So for the people that want to stick it out, does it make sense to kind of be worried about, I guess, the short-term trends where we've seen for 40 years overall home prices have risen just fairly consistently over time?
Yeah, I mean, I guess it depends, right? Like my perspective is no, but I also invest differently than the average Canadian. I would say, to me, it's you should hold property because you and this is what I think Canada really needs to shift towards, right? And I hope why I would hope a correction will teach us this is that we shouldn't be buying property to make it more expensive, right? The value of real estate as an investment class is maybe not its passiveness, because I actually don't think that being a landlord is a passive investment. I think it's a relationship business, but it's yield, right? And it gives you opportunity to start a business. on a leveraged basis, right? And to have somebody else service your debt. We've gotten so far away from the concept of being cash positive, from creating yielding investments, that I think we need to return to that. And to me, that's maybe what a better reversion to the mean is getting to more normal cap rates, right? People buying for rental income rather than capital appreciation. And to me, that also is a more compelling way to start solving the housing crisis, because people are now buying with the objective of providing that unit for rent, right? And this, because you've seen this demonization, like cultural demonization, but on both sides. Landlords hate tenants, tenants hate landlords, and it's like been almost like propagandized by a lot of the things that have happened over the past little bit, with COVID policy and who questioning who's getting the benefits of deferred payments and whatever, right? I think as we start to resume that proper delivery of housing at any tenure, that to me is a good thing. And I don't think until that happens, I don't think prices will ever like stop kind of moving in one direction or the other. I would say, yeah, people should be worried about how much growth we've seen. Like that would be my answer to that question. Yeah. It's not sustainable. We're selling far above replacement cost right now. All it takes is for the supply chain to and it's compelling enough that builders want to put product out into the market right now. As things start to get resolved, I think on that side as well, like as construction costs start to come down a little bit, which they sort of have to as a result of the labor markets, recession, et cetera. I think there's going to be some equity be erased. Will it come back in the fullness of time? Hell yeah. But the reason it will, or what you should be thinking about is, what can this asset do for me in the meantime, right? Not how much is it going to be worth one day? Because the reality is, what it's worth is a function of what you paid for it, but what you owe on it is really what matters, right? You want to own it doesn't matter what the product is worth. Your goal should be to pay it off, right? And then use it to provide housing and income for your own investment purposes, right? So that's my perspective, I guess.
I think it's interesting, for the past 40 years, it's been such a clear trend. It's difficult to say what it looks like for the next 40 years out, right? Interest rates just falling constantly. Is like, where do interest rates settle, or do they settle somewhere in like the coming decades? Could we eventually see rates rising 10% higher again? And if so, how long does that sustain? There's just so much uncertainty with housing. I don't think anyone should be at this point trying to make a short-term bet on it. It's getting to the point where there's just so much risk, and with supply at current levels, it's not going to stay like that forever, right? I think the people you're talking to, right, you're seeing a lot of people looking to relist lately.
Yeah. And I think it's interesting what you just mentioned, right? Like in regards to rates, because I would say I think rates will, I think we've figured out a way, or we think we've figured out a way to run the world with a low rate interest rate environment. Yeah. Right? And modern monetary theory is great, but it's still just a theory, right? And we're learning right now that in practice, it might not actually be exceptionally good, right? But the challenge is you can't really go back from where we were 2 years ago, And so I would say we're probably, I don't see us, I would say likely rates will settle somewhere between 0 and 5%. Less likely they'll settle between 5 and 10%, as an example. And to me, this is like, it's a gift, but it's also a curse, right? Like, because the same people who are controlling these decisions are debasing sort of the monetary system on its own. And I don't want to get too existential about it, but like, to me, that's why people are going into hard assets, and I think that's sort of if you read between the lines, it's a big piece of the puzzle, right? It's like, well, if they're going to give me all of this debt for basically next to nothing, we're watching the wealth of people with assets be inflated. Is it, and I think you asked this question too, is it the dollar, is it the value of a house that's going up, or is it the value of a dollar that's going down, right? And when you see the popularization of things like Bitcoin, et cetera, right, like that tells me that this is actually happening.
Maybe we'll jump to one last chart here before calling this a day. So I want to take a look at Vancouver. So everyone knows Vancouver is expensive. No, nothing new there. But if we go back just a couple of years, so actually let me go to single family homes. So back in 2018, we peaked around 1.6 million. Obviously took a dip for a couple of years afterwards, but now we're about $500,000 higher than that. And so we're sitting at 2.125 million for the average single family home in Greater Vancouver. So I pulled together this chart, which essentially takes the Prime Minister's salary, $360,000, and we were trying to see, could the Prime Minister, obviously Justin could buy a home in Greater Vancouver if he really wanted to, but someone on that salary, could they do it? And the answer is it'd be really tight. We estimated that the maximum home price would be about 2 million, so falling short of about $125,000. And I just thought it's really interesting where you have this person in basically the top position within the country, and they can't theoretically afford the average single family home in Vancouver.
Yeah, I mean, I think it's funny, right? And it's just from my perspective, like I think it's an especially good one. Like, and you said that this piece of content specifically kind of took off as well, right? It wouldn't be that funny in a typical scenario, but when you have someone who has such a degree of naivete towards the housing crisis that we see going on, and just this detachment and seems like an apparent unwillingness to do anything about it, it's especially ironic that this has sort of ended up happening. But I mean, this is the reality in Canada, right? And to me, it's you've seen, and many other countries have gone through these cycles, right? Most European countries have gone through these cycles. America went through these cycles where you start to see a disparity that evolves as a result of asset holding and either policy error or deliberate policy to divide the country into a lower and a higher class, and it's this erasure of the middle class. And now you start to see these urban areas, Vancouver being a good example, but Toronto being another one, where we want to be world-class cities, and you have these sort of places where people who aren't world-class can live in Canada in other cities. But it's like, to me, I guess the question becomes, is this the direction that we had intended forever? And are there consequences as a result of this? Los Angeles and San Francisco have, some of the highest average prices for real estate in the world, and would be considered world-class cities. But that disparity that's been encoded as a result of those of that wealth creation. I think I use Los Angeles a lot as an example, right? You have Beverly Hills and 6 kilometers away, so you have $20 million houses, and 6 kilometers away, you've got, Skid Row. And Vancouver, you're starting to see something very similar, right? It's more concentrated, I would say, but like disparity can create a problem, and it's maybe not something that we should necessarily aim for when we're creating housing policy, right? And so anyway, I mean, obviously a greater conversation, but to me, it's the Prime Minister is a career in which it's sort of in your upper echelon, right? If even those people can't really afford, it's I mean, you've just created a pretty big mess, right?
Yeah, absolutely. Well, yeah, thanks for taking the time to chat today. We'll be covering Greater Toronto area stats in probably a couple of weeks here. And obviously next month we'll cover what happens with April 2022 on a national level again.
Yeah, for sure. Yeah, so we'll try and do, I guess, the national ones. Korea stats come out on the 15th, or around the 15th. So try and do those in the middle of the month, and then we'll do the GTA at the beginning of each month. Amazing.
Awesome.
Well, yeah, thanks for your time, man. I appreciate it.
Yeah, thanks, Dan.